Bro, welcome to Prime FX. Okay, so today I want to teach you guys a best boom and crash strategy available. Okay, so what most people do when they come to boom and crash is they want to scalp, they want to catch the little moves, or they want to catch the huge spikes and go away. And sometimes they get caught in the moment. Sometimes they get caught by these huge spikes when they are trying to catch these little peeps. Okay, so that's not the way you should trade crash and boom, all right? That's not the way you should trade crash and boom. Crash and boom is like every other market out there, like every other asset that you can trade. Okay, crash and boom is not only about these spikes and the little movements. Okay, sometimes when you are trying to catch this spike, this thing will drag you. Imagine somebody trying to catch, let's imagine somebody trying to catch spike from this area now. Okay, imagine that this thing will drag you up to this place before dropping, and maybe you have closed by that time. Okay, so I will teach you today the best boom and crash strategy that will work for you if you implement very well. Okay, so this is basically price action strategy. All right, I know maybe you have been hearing about price action. Today I will teach you how to trade with price action, how to trade boom and crash with price action. All right, so first thing you need to do is to go to the higher time frame, depending on the kind of trader you are. If you are a swinger, you want to go to the daily time frame to analyze. But if you are trading for the day, like you want to hold your trade for hours and take your profits, then you'll be using the 4 hour time frame or 1 hour time frame. But I prefer the 4 hour time frame, okay, because it will make you to see the chart very properly. As you can see, I have no indicators in this chart. I have no single indicator here. Pure price action, okay. I use pure price action. So I'll show you what to do now. Okay, so when you get to your chart, this is crash 1000. When you get to your chart, first thing I need you to do is to mark up your chart. Okay, mark up your chart. All right, you mark up your chart. What do I mean by marking up your chart? You first of all mark out your resistance and supply zones. After that, you mark out the lowest and the highest point price reached before reversing. Then you mark your trend line if there is any trend line. Then you check for possible supply and demand zone. We are going to do all that now. Okay, so let's go. As you can see, you squeeze your screen to the minimum, to the zoom one zoom level, then you mark up your chart. All right, so as clear as day, we have our resistance here. We have a very clean resistance here. As you can see, this is a resistance zone. As clear as day, we have a resistance zone there. Okay, so after that, let's see if we have any other. Okay, we have a support, kind of support zone here. Yes, this is a very good support zone. As you can see, price got here, bounced back, got here, bounced back, got here, bounced back. Now the same thing here. Okay, so let me change this color. Let me change this thing to okay, good. So we have our support zone here. So where is the highest point that price last reached before reversing? Okay, mark it out. Okay, let's use the horizontal line to do that. So this is the highest point price reached before coming down. Okay, and this is the lowest point price reached. Okay, so we have this. Let's see if we have any possible. Do we have a trend line? 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 Okay, I will validate this trend line. I will validate this trend line when price reach here and bounce back. That's when I will validate that trend line. But let's just remove it for now. Okay, so we don't have any trend line here for now. Then we check if we have any supply and demand zone. Okay, let's see. Let's see. Okay, we have a supply zone here. We have a supply zone here. We have a supply zone here. Please go and read about supply and demand zones, okay? Or you can watch videos on supply and demand zones. I will be making a video on supply and demand zones as soon as possible. Okay, so let's quickly dive into why we are here. Now, after marking up your chart, you can see we have marked out our supports and resistance zones. We have marked out the highest and the lowest point price reached, and we have marked our supply and demand zone. Okay, so what you want to do is wait for price to reach one of these key levels. Okay, don't stop trying to catch spikes or catch the little movements on crash and boom. Just wait for price to reach one of these key levels. Then you can place your buy with confidence. You can place your sell with confidence. Yes, I do buy and sell crash. I buy crash, I sell crash also, without getting caught by those spikes or anything. Okay, so don't try to scalp. Stop scalping on crash and boom. It is very, very dangerous. You can scalp on volatility indices, other indices, but crash and boom is very, very dangerous to scalp. Very, very dangerous. So you don't want to do that. What you do here is mark out these key levels, then wait for price to reach those zones. Okay, now let's see what happened here. Okay, now we have this great support here. Okay, notice that we have this support. This is a very strong support. This support actually broke at the time. As you can see, it broke at the time. This support broke, went back up, then still hold this. This is a support. This support still held it here. Okay, as you can see, then it went up again. Okay, now assuming you have marked out these key levels, let's say you have marked out when you saw these two touches here, 1 2, assuming you marked out this level, you could have caught this sell. Yes, I caught this sell. Yeah, I sold this asset at this time till I took profit somewhere here at the next key level. Okay, so as you can see, this is a resistance zone. Then what you want to do is wait for price to reach one of these key levels. As you can see, price got to this place and consolidated for a bit, consolidated for maybe for some days. As you can see that consolidation there. Then after that, you see this huge bearish engulfing candlestick. Look at it. It's a very nice bearish engulfing candlestick. Okay, when you saw that candlestick, you could have entered for a sell. Yeah, I can remember I entered for a sell there. After that candlestick finished forming, I entered for my sell and I sold down to this next key level. Okay, that's very, very huge profits if you know. Okay, so what you want to do is wait for price to get to these key levels and give you a reversal candlestick pattern. Okay, reversal can maybe a doji, a pin bar, an engulfing bar, a morning star, or evening star, anyone at all. A good reversal candlestick pattern, then you can enter for your sell or for your buy with confidence without being afraid. Okay, as you can see, this 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 strategy works very, very well. As you can see, the sell came down. Even if you wanted to catch some pips from here to here, just to this place now is 130 pips. As you can see, almost 150 pips. Now imagine riding it down to the next key level. Imagine riding it down to the next key level. This almost 180 pips. 180 pips, my bro. 180 pips is a lot of money if you use a good lot size. Okay, so stop trying to scalp boom and crash. Okay, so what you want to do is wait for price to get to these key levels, then you pick your buy or your sell with confidence. Okay, so where you take profit is the next key level. Okay, the next key level, my bro, the next key level. You don't just take profit anywhere, you take your profit the next key level. Okay, why I took profit around here was because of this support I found here early, so I took my profit somewhere here. Okay, you don't just take your profit anywhere, but if you, depending on your daily target or your risk appetite, how much you want to take in a day is left for you, but I would like to maximize my profit. Okay, so where you place a stop loss is above the candlestick. Okay, above the candlestick. Let's say after this bearish engulfing candlestick, you place a stop loss above the candlestick. Okay, above this is just 60 pips. Okay, place a stop loss there, then you'll take profit to the next key level. Don't be afraid. Even if the price, even if market is reversing, don't be afraid. Okay, don't be afraid. It will still crash to still get to your next key level. As you can see, it got to this key level before going up. This is 180 pips. This is 180 pips. Okay, that's a very good risk to reward ratio. Okay, risking 60 pips to catch 180 pips is a very, very good trade. Okay, so now see what happened again. When price got to the next key level, to the next support level, see what happened. It formed a doji. Okay, it formed a doji. See that this strategy works very fine if you follow the step one by one. See, that is a very good doji candlestick. Now see where price is at. Okay, see from the closing of this doji to this point, this is 75 pips. It's got to 86 pips at the time before crashing. You know how crash works. So this is 75 pips. Okay, that's good money if you use a very good lot size. Okay, this strategy works. Stop going to 1 minute time frame to scalp. Go to 4 hour time frame, analyze the chart. After analyzing, go to the 15 minutes time frame and pick your entry. Very, very simple. See now. From that point to this point, 75 points. As you can see, this strategy works. Okay, this strategy works. Just follow the rules. Wait for price to get to the next key level. Mark out your key levels. Wait for price to get there. Then you can pick your entry. Okay, see, we have a kind of, let me call this a supply zone. Okay, I will be looking to sell when price get to this key level. Okay, immediately price get to this key level, I will wait for a reversal candlestick pattern. When I get that candlestick pattern, I'll place my sell and take my profit the next key level. Okay, the next key level. Don't forget the next key level. Don't just take your profit anyhow. I'm sorry for that. So you want to take your profit at the next key level. All right, you place your stop loss above the reversal candlestick pattern, then you take profit the next key level. Okay, let me show you one more example before I end this video. Let's say you have marked out this zone as your support. One touch, reverse, second touch, reverse, third touch. Man, you should mark out this zone. This is a support zone. This is a support zone. You can see it clear as day. Okay, even a blind man can see that this thing is a support zone. Okay, sorry for that. This is a very great support zone. Then you mark it out. Okay, let's say you marked out this zone and you wait for price to get there again. Now see what happened. When price got here, this strategy works. See, when price got there, it gave us this pin bar. Man, look at this thing is a pin bar. Okay, if you don't know about candlesticks, you go and study about candlesticks. This is a pin bar. See it. This is a pin bar. That candlestick is a pin bar. That bullish candlestick. Okay, let me zoom in and show you. This is a pin bar. This candlestick here is a pin bar. Okay, when we got that pin bar, you enter for the buy after that pin bar close. Place your stop loss below that pin bar. Below the pin bar. You can use a little lot so that your risk will be little if you have a small equity. Place your stop loss below the pin bar, below the candlestick pattern. Then your take profit should be the next key level. Okay, should be the next key level. All right. Though this thing did not get to the next key level before coming down, but if you are taking maybe partial profits, you could have got, let's say, okay, this pin bar close here. From that point to here is, man, this is 135 points. So let's say you are taking 50 points from each trade. Okay, from this strategy, let's say you're taking 50 points. Look at this is 50 points here, or 100 points. Anyone you're taking, this is 100 points here. But for some reason, this thing did not get to the next key level. Okay, I can see why. This is a little resistance zone here. Okay, that's why. This is a resistance zone. You can see that's why price did not get to the highest key level. This is a resistance zone. First touch, second touch, third touch. That's a resistance zone. Okay, that's a very good resistance zone. That's why price reversed. As you can see, price reversed. Though it later went up again. Okay, that's how you trade with this strategy. Okay, this strategy works. It works very, very fine. If you don't understand anything, you can drop your questions in the comment section. I'll answer them. Thank you for watching. Stop scalping boom and crash. It is very, very dangerous. Okay, I don't want this video to be long. I could have showed you more example on boom, but I want to end this video here. If you have a question, drop it in the comment section. This is a very good, very good strategy. Okay, don't forget to like this video and subscribe to this channel. I'll be dropping more videos, more strategies on boom and crash on this channel. Okay, don't forget to like the video and don't forget to subscribe. You're welcome to Prime FX. Okay.